Hello, Southern California, and welcome to this week's edition of Right on the Money with Tom Mosley. I'm your host, Kristin Oakley, and joining me is the man himself, Tom Mosley. He is the founder and president of Mosley Wealth Management, based right here in Southern California. We've got another great show for you today. We so appreciate you joining us. And Tom, I know in addition to the television show and the radio show, you have been so busy with lots of live events. So I would love for some of our viewers to hear more about how they can get connected and come actually meet you and the team in person.
Yeah, we would love to meet everybody out there. If you'd like to come see us, you can go to our website, Mosley Wealth Management, M-O-S-L-E-Y. You see my name on the screen there. And because Mosley spelled, I found out growing up about 5 different ways.
Right.
And my mom's name before she married my dad was actually Mosley, but it was spelled differently.
So interesting, yeah.
But you can go to our website, Mosley Wealth Management, and you can check a tab there on seminars, and you can find we are maybe 7 to 10 every single month. We're across Southern California, spread all the way from way up in Glendale and all the way out to the Rancho Cucamonga area, all the way down to Scripps Ranch and very near the San Diego State campus. We're all over the place. We're teaching 1-hour segments on Social Security, 1-hour segments on taxes. We're teaching a 2 to 3 hour class several times a month on, we call it the Retirement Master Class, which is all of those things combined: income, inflation, investments, taxes, healthcare, and legacy. We go through the whole plan. All of the things that we build into a retirement blueprint. When one of you call in and you get on our schedule, you come to one of our offices that are also spread all over Southern California. You come to our offices, meet with one of our all-star fiduciary advisors, and we'll develop that blueprint. Well, we talk about specifically in those workshops all of the things. Now, you know, we're not like some people. We don't bribe you to come with food, so you're going to go to a library or a community center or maybe a college campus, but it's going to be really strictly there. And I got one of the greatest compliments ever recently. This lady said, you know, I've been to 5 Social Security workshops where they always talk for about 5 minutes on Social Security, and then they want to talk to me about their investments or something else.
Right.
And she said, you have just specifically talked about Social Security. We spend about 5 minutes talking about the whole big plan, and then we spend the entire rest of the hour and 5 minutes talking specifically about the topic of the day. So if you want to spend a spent time, an hour, come to see us. Our goal is always for you to find value, for you to learn something when you're there, and then you get to know us, and you may want to come in and meet with us and take a part in what we're doing in building retirement blueprints for as many people in Southern California as we possibly can.
Wonderful. Tom, thanks so much for explaining all that. And I know that it's so important for you to register ahead of time so that Tom and the team can make sure they have enough materials ready for you. So again, to check out the events that are going to be in your area coming up, you just simply want to visit the website mosleywealthmanagement.com. Well, one of the topics we're going to be talking about today is something that Tom and the team have been getting a lot of questions about: the fixed indexed annuity. Now, don't be tempted to change the channel. We know, and Tom, we've talked about this before, that the word annuity can get a really bad rap. But the point is, folks are coming in and they are specifically asking you about these fixed indexed annuity products. So we thought we would devote today's show to really diving deeply and explaining what they are, how they work, and most importantly, could one potentially be right for you? So let's get into it. So first question I have for you: why do you think so many people are asking specifically about this product right now?
I think that's probably a pretty easy question to answer. Our grandparents, by and large, had pensions. There was a time where 47% of all workers in America, according to statistics, had a pension, and there were a lot of one person in the family was the only one that was outside of the home. The other one stayed home and took care of the kids or did whatever. So 63% of all adults were covered by a pension at one time. Now it's down to 16%. So we've gone from almost 2/3 of the people being covered by a pension now to only 1 out of 6 being covered by a pension. Well, that's a big thing, because a pension is a program that actually is backed by an insurance company that puts the money into an annuity. But yet, you know, there are a lot of people say, well, I don't like annuities. Well, why not? Nobody can tell you why not. It's like when I go back to the Midwest and people say, well, I hate California.
Right.
And I say, well, why do you hate California? Well, I don't know, but I just heard it's bad. So you've heard it, you've never been there. And they said, no, I've never been to California, but I hate California. Well, what sense does that make? I remember I didn't necessarily like California until I came over those hills in a van with a bunch of kids when I was a youth director, and the temperature went from 110 degrees to like 75 degrees that morning. And I'm thinking, I could live with this in July, you know, as opposed to some of the other things. So there's a lot of benefits to everything if it fits for you.
Right.
Same way with an annuity. A lot of people don't give the benefits of the annuity. We're going to talk about that a little bit later, but the biggest reason is people are retiring. They're retiring with less money historically saved. They're retiring with an insecurity about Social Security, because we're told now within 8-9 years, it may be that it's down to paying out only 75 to 79% of what's projected. And the Wall Street Journal says that's going to be an $8,000 to $17,000 reduction for each person out there if you put it on in numbers. So there's a lot of insecurity about the annuity you do have, because Social Security is an annuity. It's something that's going to pay you an income for as long as you live, and an increasing income as well, with the little raises that we get for supposed cost of living that generally don't cover the cost of living. So people are facing retirement. And here's another thing, Kristin, we're living a lot longer.
Oh, yes.
So the good news is we're living a lot longer. The bad news is we don't have that lifetime income that most people had from a pension in 50 or 60 years ago in time frame, but we're living a lot longer. We've got our 401k, but when a 401k gets to zero, you have no money left. I mean, go knock on the door at your brokerage firm and say, you know, I'm 82 years old and I'm still alive and healthy, and my 401k ran out of money last year, but I'm still here and I'm still hungry. They're going to go and say, just a minute, I need to call somebody. Hello, local police department. We've got somebody crazy here. They've got down to zero and they're demanding money, because a 401k or an IRA won't do that. But an annuity will give you an increasing income if you set it up the right way, that's guaranteed by the insurance company. The risk is covered by them for as long as you live. And if you set your IRA up the right way, as long as your spouse lives, and if there's still money left in it when both of you pass away, that still goes to your heirs. And even after you run out of your money, it will continue to pay. Now, I've jokingly said before, if we call that a 𝗶𝘃𝗶𝘃, everybody would want to go buy a 𝗶𝘃𝗶𝘃.
Right.
But we have to call it an annuity, because that's what it is. It's an annuity, and that's why people are flocking to it. The living longer, retiring earlier in some cases, no pensions are there to pay the other. The one annuity most everybody has is Social Security, and it's insecure right now as to we are insecure about whether it's going to still be there. So people are looking at annuities, and I'll give you some numbers. In 2016, the industry took in $125 billion into fixed indexed annuities in 2016. In 2023, the industry took in $386 billion. More than 3 times as much money is flocking to this, because people are beginning now to come in and say, I've heard bad things about annuities, but I've heard some good things that they do.
Right.
And that's exactly what we want to look at in the rest of the show. We're going to talk about the different kinds, because there's some kinds of annuities that I hate, okay? And there's some kinds that you should probably be leery of because they don't fit you. We're going to talk about that, and then we're going to go into the benefits of annuities and how they can help you.
Yeah, so much goodness to get into, but the numbers speak for themselves. I mean, I think that's why this is such a timely subject, is that there was $386 billion that were put into annuities just last year alone. So Tom, I know that this is just one of many tools that you incorporate as part of a full financial plan for folks. So talk a little bit about your complimentary retirement blueprint for anyone who has not yet gotten connected to come in and receive one, what they can expect when they call into the show today.
Fantastic. The first of 6 different things that we really delve into and we print reports for you, and we look at your situation, and we can begin to tell you. First of all, we want you to tell us how much you need every month in retirement, so we can tell you how much income we need to provide for you from your portfolio that you've put together. And many times that's where the annuity comes into play. There are some people who just look at the annuity and the particular kind we're looking at, and we say, you know, it's principal protected, and we'll get into that later, but that means that you're not going to lose money in this thing. It's not going to ride the market, the kind that we use. It's just going to go up. When the market goes up, you get part of it. Now, the part of it is what you need to hear. Because some people come in and say, well, that I get the upside of the market, but none of the downside, like one big commercial on TV. You don't get all of the upside of the market. You get part of it, but you get none of the market loss. So we build an income plan. Because it's your income in retirement. How many times have we said this?
Yes.
Not your lump sum that makes a difference. You can run out of your lump sum, but you better have a retirement blueprint that shows how you can never run out of income for the rest of your life. Biggest fear of people 58 years of age and older by surveys is not dying, but running out of income the rest of your life. That's where the annuity fits. Now, a lot of people say, well, you're an annuity pusher. No. That's somebody who only has an insurance license and they never met an annuity they didn't love because that's all they can sell. They can't either get the licensing to actually sell investments. And Mosley Wealth Management is a registered investment advisor that does investments, not insurance. Now, we have an insurance division, but last year, less than $1 out of 5 of the people that we helped invest went into annuities. So you can't call us an annuity factory, or you can't say, well, they just put an annuity with everybody, because we do not. We place annuities when you need an annuity. That's what a fiduciary does. They don't have a group of products they're trying to sell. They have a desire to find out what your needs are, and that's where they build your needs. And then once we get the income set, those annuities help us sometimes with inflation, because we have to address that.
Yep.
Then you buy your income with the annuity, and then everything that's left is your investments. This is your paycheck, the annuity, the income. The playcheck then to go and do what you want to do, and the freedom to do what you need to do when you're in your 60s and 65 and 70-year-old ages and 75. Go do those things. We call them the go-go years. So many people don't have the income nut cracked. They don't have that set. So therefore, they're afraid to spend the money they need to spend in retirement in the early years and their go-go years. And then we tack on taxes, big thing. And then we do health care, and then we do legacy. That's what a complete retirement blueprint is.
It is so comprehensive, so holistic, and we're excited for more of you to be able to get your complimentary retirement blueprint. So to do so, it's really simple. All you need to do is call that number that you see on the bottom of your screen, 866-709-1462. Or if you'd rather not talk to someone right now, but you do have your smartphone handy, if you simply pull it out, you can open up that camera app, then point, click, and scan the QR code that you see there down in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few short, simple questions, and then a member of the team from Mosley Wealth Management will reach out and connect with you to schedule your complimentary visit that way as well. Don't go anywhere. When we come back, Tom is going to be going through the different types of annuities, the benefits, and helping to answer the question, could one potentially be right for you? Stay with us.
Welcome to this Right on the Money moment with Tom Mosley. My name is 𝗙𝗵𝘅𝗲𝗍𝗄, and Tom, I have a very important question for you. What is happening on the horizon with Social Security? So many questions surrounding Social Security right now.
So many people are calling it now social insecurity, because they've been telling us for about 10, 12, 15 years that in 2033, it used to be like an eon away, they've been telling us that they're going to have to lower the payouts on Social Security to about 77 to 79%. Well, it was a little bit of a shock treatment about 4 months ago or so when a big article came out in a national publication and said that's going to cost the average American person $8,000 to $17,000 per year. So a married couple would be $16,000 to $34,000. So here's what I would say about Social Security. You can't control Social Security. You can't control Congress. You can't even vote the people in that you want to do what you want them to do. But what you can do is you can build a contingent plan that if I do lose $16,000 to $34,000 in my Social Security payout, what am I going to do about it? How am I going to make up that difference? What happens in the world you can't control, but what happens in your world, you need to be making preparation with your financial planner, making sure that you are addressing that potentiality that you could lose a big chunk of your Social Security. And the question is not, will it happen or could it happen, but if it happens, what are you going to do about it?
People have to be prepared, Tom, and you're offering such sage guidance right now. You truly are.
You have to.
Thank you for watching Right on the Money Moment. My name is Cynthia DeFazio with Tom Mosley of Mosley Wealth Management.
Welcome back, Southern California. You're watching Right on the Money with Tom Mosley. I'm your host, Kristin Oakley, and today Tom and I are doing a deep dive on a particular financial tool that a lot of folks have been coming in and asking him and the team about, the Fixed Indexed Annuity. But before we really drill down on that, Tom, I know we mentioned earlier in the show there are different types of annuities out there. There's some that you said you even hate and don't like.
Right.
So let's just quickly go through the different kinds so that folks understand the differences between them.
Well, when people think about an annuity, a lot of times they think about, well, I just give them the money and they give me money every month for the rest of my life. That's called a 𝗓𝗶𝘅. And I know we have a lot of industry terminology, and sometimes if I ever do that, because I'm so wrapped up in this industry and I've been 29 years in this industry, if I talk about a term you don't understand, please email us and ask what that term means, because I don't mean to do that. But a 𝗓𝗶𝘅 means a single premium immediate annuity. Now that very simply means that you pay a single premium and immediately you start getting money for the rest of your life.
So you pay a large sum up front.
You pay a large sum up front.
Right.
And the insurance company, based on how old you are and how long the tables show that people your age are generally going to live, they can say, well, we'll give you X amount of money per month for the rest of your life, or per year for the rest of your life. There's one big thing I don't like about that one. Now, if somebody said, well, that's like if you win the lottery and you take it on a payout basis. Exactly, okay? But what I don't like about a 𝗓𝗶𝘅 is it's a lot like your pension. Now, a lot of people get their pension, and that's another form of an annuity. But if you get that pension and you take it on your life and your spouse's life, and you guys want to celebrate your graduation into retirement, and you head to 𝗓𝗄𝗃 and your plane doesn't make it to 𝗂𝗶𝘅𝗃, then your pension goes away with you. Okay, it's gone. And that's the way it is with a 𝗓𝗶𝘅. You give a single premium, but immediately all the money, you don't have any money to take, to move, to do something else with later, to change your mind. It's a one-time decision. So that's one reason I don't like it, even though some people use those and they're effective. The one I really don't like is the variable annuity. I don't like it because of the first word. It's variable. Your money's still in the market. There's no principal protection there. And there's the expense of the annuity, and I do that because of the box that holds the investments. And then you've got what's called the separate accounts that are in that annuity, and those have their expenses as well. And since you don't really ever, you're not really ever given, this is what the fee total that you pay for your variable annuity. I wish you were, because you can go through your prospectus. That's that large book they give that you use as a doorstop for a while until it gets ragged, and then you throw it out, that 100 to 110 page, and you've signed that you've read it completely, but nobody ever has. And on page 37 and 54 and 69, there are all kinds of different fees. And sometimes people come in and they say, which one of these do I pay? Well, the answer is
all of them.
All of them. And
you're paying them even if the market goes down and even if you're losing money, right?
Even if the market goes down, even if you're losing money. We recently did an analysis of a variable annuity of a client who's coming over to us, and their fees were 5.25% per year.
Wow.
So I don't care how variable you are and how much in the market you are not going to make much money if you're paying 5.25% fees. But that's why the brokers love them.
Right.
Because they're the beneficiary, and the insurance company is the beneficiary of all those fees. There's a fixed annuity. That's a third kind. It's like a CD on steroids is what I've always called it. Because it's insured by the insurance company, not a bank, not by the FDIC. There are some insurances that you have on that up to, in California, $240,000. But that fixed annuity is like a 5-year CD. You put your money in there, it grows interest, substantial penalty if you take it out early, but it just gives you a flat fixed amount. The kind we use are the fixed indexed annuities. Now, it's fixed in that you're not going to lose your principal.
Right.
Okay? It's indexed in that it's tied to one of the indices of the market, like the S&P 500. You may, in some ways, get a portion of that. We'll talk about that in the last section. But you are tied to the market. You do not, like one guy says on his commercials trying to get people to call, you get the market gain, but you don't get any of the market loss. No, that would be heaven, okay? That would be Shangri-La. You get part of the market gain, and you get none of the market loss. Now, you may have a fee in there if you have a rider or something, so that's going to eat away at it a little bit. But look, let's solve that question. Everything has fees.
Yes.
Nobody's going to do TV shows, radio shows, have events, have an office, pay people to come in and work with you and not charge you anything. That's your parents, okay? That's my parents. That's our parents, okay?
Yep.
They're going to do things for us for nothing. But every advisor you work with is going to have a fee. And fixed indexed annuities have fees as well. Most of them. Some of them do not.
Right.
Now, the company's going to make money, and where are they going to make money? You don't get all of the market gain in those fixed indexed annuities. They take some of the gain in the good years. There may be a cap and different things that, again, we might talk about briefly a little bit later. But you need to realize there's more than one type of annuity. Now, what do I like about the fixed indexed annuity? Let me just give you some things, and I've got them written down. It's principal protected. Remember, my goal is to make sure you never run out of money for the rest of your life. And the best way for you to run out of money the rest of your life is for it to be invested in the market and you to go down 50% while you're drawing out of that portfolio. I mean, you're hitting it and the market's hitting it as well. So it's principal protected. Number two, there's potential for growth. You get part of the market gain. Right now, some of the annuity companies that we're working with are paying the first 7.5% that the S&P 500 makes. Every single year you get, that's a cap, okay? Some of the companies are paying like a 60% participation. That means if the S&P 500 makes 20%, you're gonna get 60% of that, 12%. So some of them are playing in beautiful ways, so you get the potential for growth. Number three, it's tax deferred growth. You have to take it out eventually. If it's in an IRA, you've got the RMD regulations, but it's tax deferred growth. Here's the big thing. You're insured that you will never run out of money when you turn on the income flow from that annuity, even after you run out of your money. An annuity, if you want to look at it this way, is an insurance policy against living too long. It's flexible, death benefits. And when we come back, I'll tell you some of the benefits and the bells and whistles is what I call them on some of those fixed indexed annuities right now.
Tom, thank you so much. What a beautiful crash course education that we're giving folks this weekend. And again, if you would like to be able to come in and just figure out what could be best for you and your situation, for no cost, no charge, no obligation, the team of Mosley Wealth Management would love to meet with you and create your very own personalized, customized retirement blueprint. To claim yours, all you need to do is call that number that you see on the bottom of your screen, 866-709-1462, or again, you're welcome to scan that QR code and that will get you connected as well. Don't go anywhere. As Tom said, when we come back, he's going to be talking about some of the benefits and answering the question of could an annuity be right for you? Stay with us.
Better is just better, but it doesn't begin without a plan. Better, it's the American way, from a better house, to a better career, to a better life for our kids. Americans strive for better. But when it comes to your retirement, what does better mean to you? A better income? A better lifestyle? A better solution? A better retirement begins with a financial plan. To get your complimentary financial plan, call the number you see here. It's your retirement and an opportunity for better.
Welcome back to Right on the Money with Tom Mosley. I'm your host, Kristin Oakley, and before the break, Tom was sharing all the different kinds of annuities that are out there, but really today's show has been focused on the fixed indexed annuity, which is what so many folks have been coming in and asking you about. Let's go through some more of the benefits that are available, and then, of course, I know we want to answer the question of could an annuity be right for some of our viewers?
Absolutely. The commercial you just saw talked about things could be better right now. Now, let's talk about interest rates. If you're borrowing money for a house, they're not better right now. They're worse, okay? But if you but if you're loaning money to an insurance company to put into an annuity, that's basically what you're doing. The rates that they are paying are far better right now. So right now, the market, even if you got into a fixed indexed annuity maybe 5 years ago or 6 years ago, there's some better models out there. My daughter, when she went to college, she drove an old car, and I can remember when we traded it in, I got in the car to drive it. There was no push button, it was a key. There was no backup camera because I had to actually turn my neck around and look behind me, can you believe? There was no knob over here to adjust that mirror. She had to roll down the window and do it. There are cars that are just better. Annuities are just better. Fixed indexed annuities are just better. They're paying better payouts right now, and they have what I call bells and whistles. One of the bells and whistles I love right now, it's not long-term care. We want to make sure and clear all the regulators out there, we're not saying it's long-term care, but they will actually pay you an activity of daily living benefit, which means if you can't do 2 of the 6 activities of daily living, some of those fixed indexed annuities will double your payout for 5 years for you or your spouse if either one of you hit those 2 activities for daily living. You don't have to go in the nursing home. You can actually even stay home and get home health care. And once you hit 2 of those 6 activities of daily living, you can get a doubler on that for 5 years. So a lot of bells and whistles. The environment right now we have in the money field right now is great for fixed indexed annuities. Is one for you? I don't know. Do you need income? Have you tried to get some kind of coverage in case you need care later on and you can't afford long-term care and you want something that will be similar to it that will help you cover it? Do you want just protected growth so that your principal is not always up and down and fluctuating in the market? You need to look at a fixed indexed annuity. Guaranteed principal, part of the market gain. Really a neat product.
Wonderful. Tom, thank you so much for this valuable insight and wisdom this weekend, and thank you for joining us. Again, that number to call to receive your complimentary retirement blueprint and to answer the question, could a fixed index annuity be right for you? Just simply call that number on the bottom of your screen, 866-709-1462. We love you, Southern California. Be safe, be happy, be blessed. We look forward to being back with you next week.